Today, Ether treasury firm SharpLink Gaming plans to join the stock tokenization boom. European banks team up to develop a stablecoin. And Hedera's chief policy officer discusses the new task force between the US and UK to improve cooperation on crypto assets. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies are in the red, with Bitcoin sliding to the $111,000 level as of noon Eastern. Ether dropped nearly 4% to $4,000, and Solana Sol token slid by nearly 6% to $201. Okay, sticking with Solana as we take a look at the top stories. Forward Industries chair Kyle Samani joined CNBC's Squawk Box this morning to discuss the company's Solana treasury strategy. When asked about Sol's correlation to other digital assets, Samani argued that the cryptocurrency's drivers are similar to Ether's.
There's always natural correlations in crypto markets between different assets. Solana is most frequently compared to Ethereum because it competes with Ethereum. And if you look at a lot of the drivers for Ethereum, they apply for Solana, the most notable being the Genius Act, which passed earlier this year. SEC Chairman Paul Atkins announced Project Crypto earlier this year as well. And the Clarity Act, which is now in Congress, we're pretty optimistic that's going to pass. All of these are major regulatory tailwinds for Solana.
Now, this week we told you that Forward Industries plans to tokenize shares of its stock on the Solana blockchain. And all this comes after the company closed a more than $1.5 billion deal to launch its Solana treasury. As of midday, shares of Forward Industries dropped more than 9%. Next, Ether treasury firm SharpLink Gaming plans to tokenize its equity as part of the growing trend in stock tokenization. The firm, chaired by Ethereum co-founder Joe Lubin, revealed it partnered with fintech firm Superstate to tokenize its shares on the Ethereum blockchain. By noon, shares of SharpLink slid more than 5%. Now, this comes as both crypto treasury companies and tokenization efforts have picked up traction as the industry operates in a friendlier legal and regulatory environment under the current administration. Last, European banks are teaming up to develop a stablecoin. Netherlands-based ING Bank announced today that 9 European banks are partnering to launch a euro-denominated stablecoin. Others in the group will include Italy-based UniCredit and Denmark-based Danske Bank. According to the announcement, the stablecoin is expected to be issued in the second half of 2026 and would be regulated under MiCA, the EU's regulatory framework for digital assets. Now, this comes as stablecoins pick up momentum here in the U.S. following the Genius Act stablecoin bill going into law in July. Just this week, we told you that JP Morgan Chase CEO Jamie Dimon said that U.S. banks are weighing whether to have a consortium as they look to enter the stablecoin space. All right, for our main story, this week, the governments of Britain and the U.S. announced the two regions are forming a joint task force to align crypto rules. I spoke with Nilmini Rubin, Chief Policy Officer at Hedera, about the new task force. She also weighs in on recent regulatory advancements for digital assets. The U.S. Department of the Treasury announced on Monday that the UK and U.S. will join forces to drive innovation between the two regions and improve cooperation as it relates to crypto by creating what's called the Transatlantic Task Force for Markets of the Future. The purpose of this task force is to explore options for short-term to medium-term collaboration on digital assets while regulatory regimes are still developing, as well as options for long-term collaboration. What do you think about this new task force, and what do you think can be accomplished? Do you think it could help boost global adoption of tokenized securities, stablecoins, and other digital assets?
Well, thank you so much for having me here. Based on my experience in U.S. global policy from the Treasury Department, the White House, and the U.S. Congress, I look at this task force creation and I'm really excited about it. It's an opportunity for two financial powers, the United States and the UK, to drive forward together in this moment where both countries are developing crypto and digital asset regulation.
And what are you hoping is accomplished?
We're hoping that this task force comes together to collaborate on different ideas that should be in regulation, but also on ways that they can implement that regulation and ways to think about innovation in the digital asset space. It's really innovative that they're coming together because so much that's happened in digital asset policy around the world has happened within single jurisdictions or within single countries. So this is one of the early collaborations that we've seen. And it's an opportunity for the administration, the Trump administration, to kind of think through what they want to do on the global stage in 2026 when the United States is the chair of the G20.
Yeah, and the task force is chaired by officials from both regions' treasury departments and is expected to report within 180 days. It will also seek input from industry experts. Why do you think this partnership, specifically between the US and the UK, is important? Is there any friction legally between the two regions that exists today as it relates to crypto that needs to be addressed?
This task force is important in part because of the size of both economies, the financial sector of the United States and the United Kingdom. They're both very large and important, but it's also that both countries are coming up a little from behind on digital asset regulation because you have had other regions moving forward. So it's an opportunity for the two countries to come together, sort of leapfrog over some of the policies that we've seen promulgated in other jurisdictions.
Now, focusing on recent regulatory advancements for crypto here in the US, the president signed the Genius Act stablecoin bill into law in July, and that's when we got our first major piece of legislation in the US to regulate crypto. What's your reaction to what's happening on Capitol Hill lately as it relates to digital assets? And what do you think has changed since the Genius Act became law here in the US? Did anything change for Hedera?
Well, one big change following the Genius Act is this sense of comfort in industry, and I think with consumers, that people know what the rules are. And I think that that's a really, really important for companies that want to build on Hedera, or just companies in this space, because they know what to implement for regulation. Um, it's also very energizing for the next phase of digital asset regulation in the US, which is market structure. So the House has a bill, the Senate is developing a bill, and that's going to be even more important as we get all of the rules, not just for stable coins like the Genius Act, but all of the rules for crypto.
And we'll talk more about that in just a bit, but what do you think about some of the pushback from banks regarding the Genius Act? Some banks take issue with the fact that the bill doesn't ban crypto exchanges from offering customers rewards on their stablecoin holdings. What's your reaction to that?
We the Genius Act set in law. It was a bill that was widely discussed within Congress. There were many hearings on it. So it's certainly the text in the bill was widely worked on across parties, across the chambers, and it is fair to certainly think about how to improve it going forward. But we are at a moment where we could give an opportunity to let the rules work that have already been implemented, and before we go ahead and change them further.
Going back to the Clarity Act, which you brought up, many in the industry are now focused on that bill, which the House also passed in July. The Senate is also working on its own version of a market structure bill, as you noted, and Senator Cynthia Lummis told me during an interview that the Senate will incorporate the Clarity Act into its version. She also said she thinks the U.S. could see market structure legislation become law by Christmas. In a recent interview, SEC Chair Paul Atkins called on lawmakers to accelerate efforts to pass a crypto market structure bill, aligning with the White House's year-end push. Do you think we will see a market structure bill here in the US before the end of the year? And if that happens, what would it mean for Hedera?
I would like to see a market structure bill by the end of the year. And that is because sooner is better. sooner having the rules for industry, sooner having consumer protection, sooner having frameworks in place is just better for industry, and it's better for the American people. So I'm very hopeful that things will move quickly. There's so much energy in Congress right now to move this forward. And getting Genius passed really helped energize everyone as we thought about the next phase. And it's also just important to put all of this hard work that staff and members have put together in industry working together over the last few years. It's not just the last few months that this has been going on. It's really built on years of work. So it's definitely the right time to move the bill.
And what would a crypto market structure bill mean for Hedera specifically?
Hedera, we're a digital ledger technology, and people are building AI tools or tokenization tools or financial products on our network. And having market structure in place gives them the comfort to know how to build those products, and that they will be within the rules, because the types of companies that build on our network want to be good stewards, and they want to follow the rules, and they want to be aligned with regulators. So actually knowing what those rules are to follow is like critically important. It's just like the base of it. So it'll be really important for us. I think that we will see an improvement in the numbers of people that are building and the number of people that are utilizing digital ledger technology, crypto, blockchain, because they have comfort that it's all being done within clear parameters.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.